Hello, this is Ronnie. I'm sharing with you here a clip taken from a long video that I just finished to record for my subscribers. I think you will find the clip very interesting. Okay, that's silver, that's the weekly. And I just want to review the long-term picture again. There are a few variations we should take note of. The weekly is showing us a surge of a 1, 2, 3, 4, 5 way back from the days when the bull market started here in 2001. Okay, and we are, for all intents and purposes, we are in a massive correction here. The price action does look corrective, and that's our major assumption, that we are basically running down in that correction. Correction or not, you can see that the market lost so much of its value, so a correction can take you way lower than you would normally expect. This is A, this is B, this is C. That's our first ABC. Then we have an X. The X is basically a triangle, ABCDE, that went on for almost 1 year, and then it broke down in what appears to be a new set of ABC. Okay, so we have an A, we have a B. We'll see the details in a sec. The point is that we are not through with all this. We are not through. There is still we're still due for another plunge, at least another plunge, before we can turn around and say, hey, we got a bottom. The pattern as it stands right now is really not supporting a bottom, and we have discussed many times the Australian dollar in connection with that, other important currencies, and I don't see a bottom being voiced by other well correlating markets. Markets that correlate well with the precious metals. So my assumption is that we don't have yet a bottom. Okay, so I repeat, we have an ABC, that's an X, and in order for you to see clearly the rest, because there are so many labelings here, and this is our triangle. Okay, that's our X, and then we come down and we have an A. Okay, we have a B. We came down here, and here's the alternative. Either we take the breakdown here, 5 legs. We take it as a beginning of the C. Okay, the big C, meaning we have just 1, and that's 2. And the subsequent breakdown here is opening another 1, 2. Okay, so you have a 1, 2, and then 1, 2, and then the expectation is that you will have a 3, 4, 3, 4, etc. And only that will terminate the C. Okay, the C that began here. So why do I show the C suddenly here? Well, that's the alternative that I just mentioned. It is possible that that's an A, that's a B, that's a C. And in fact, what was here taken as an ABC is not a second wave for on the Brown scale, like I'm showing you here as a 1, 2, but in fact that's an X. That is a big change. That is a big change because it will bring forward, bring nearer, if you like, the possibility of hitting a bottom. Now we have to be very aware of that and very careful, and we'll take it, of course, into account as we get more price action here. So I repeat, if this is a 1, 2, 1, 2 situation, and this is not terribly clear, then we do have, I would say, easily another 6 to 8 months going down, or seeing the precious metals under serious pressure. Okay, another easily 6 to 8 months, maybe even a year. Okay, because by the time you finish the third wave, and then the fourth wave, and then the fifth wave, and then again another fourth wave on this scale, you're talking about many months. Okay, but the alternative that I'm just presenting here, that could be the end of the C, and the A, B, C that I've marked here could actually be an X, that begins to open a door for a quicker resolution, because that will be, in that case, you A. What we are seeing here, that for all intents and purposes can be taken as a triangle. It just looks like it's shaping towards that shape. I mean that triangle that could work out as a B. Okay, so you'll end up having an ABC, A, B, C, D, A, B, C, D, and then a tiny wiggle here to complete the B. In fact, completing an E that will in itself will be a triangle. Here with me, you'll have an A, B, C, D, A, B, C, D, E, and then it'll be ready. The B will be complete, and then it breaks down. But that could be the last breakdown in silver, and that could last just 1 month or could last 3 months. But the important thing is that once the breakdown under 13.6 is over, you could conceivably have a long-term bottom in silver and presumably also in gold. Okay, so we will be very attuned to that. We will be very careful the way we go forward now and check the price action. Right now, there is no point in spending hours and hours trying to sort the ABCs here. We can pull hairs, but that's not going to help. The pattern is just folding on itself here, and at some point we're going to have a resolution. I do not think that if it does jump in this manner that you should embrace the bullish alternative. I would think it's a mistake. Okay, I would still insist. It's not because I fancy, it's because the chart tells me that it would make sense to insist on not embracing this, a jump like that, as part of a new bull market. Okay, what I mean bull market is that is a major bottom and we are heading a lot higher. I would not think this is right. I would think that any jump in this manner would actually classify this as an A, this is a B, this is a C, and then it will smash down. Okay, so that's my opinion currently concerning silver. Now this is gold. As you can imagine, gold is following more or less the same pattern. That's our top in 2011. Run down A, B, C, again a triangle, and that's taken as an X, and then an A, and then a B. And on the weekly we have basically the same options. Yes, we have a 1, 2, and potentially a 1, 2 here. And you can see again that gold will need at least 6 to 8 months to finish the remaining legs that are required once it opens a 1, 2, 1, 2 structure. So you have a whole set of legs that are still required on the downside. The alternative, as we just expressed in the case of silver, is that that's an ABC that will turn you into an X. Okay, imagine to yourself that's an X right here, that's a C, A, B, C, that's an X. So you come down and you don't have 1, but you have an A. You have an A, and what's going on here is a B, and then another drop C. Well, it looks like a fairly simple structure, but that nevertheless will knock down the price of gold by about $150 to $200 from current levels. Yes, so it's easily going to break down 1,000. Yes, easily going to break down through the 1,000 mark. Okay, so let's go now and see the daily. So you remember that's a 1, 2, 1, and these are ABCs that are taken as part of a second wave. That's a C and that's an X, and then you end up with an A, that's a B, and potentially now we started the C down. Let's have a look from close. So far, we're doing well with the subdivisions that we worked with. We had an ABC, X, ABC, came down, smashed through the top of the A. It is absolutely ruling out the possibility that this is a 1, 2, 3, 4. Forget it. That's impossible. And in fact, the rundown here is very bearish, and in my opinion, holds hope for a continuation down after possibly just a slight jump here. I'll show you the details in a sec. So it is not inconceivable that we do have a 1, 2 complete or an AB complete. We will of course have much more to go by once we break the brown line, the critical level. That will basically tell us that the corrective move, whatever it was, whether it was a B or whether it was a second wave, is over. Once we run through the brown line in an impulse way like that, that will be a confirming signal. Now here's the 60 minutes, and let me emphasize this is not high confidence wave count. It's an idea that I think can do justice to what we see here. It really depends a lot on what the market is going to do in the next 3 trading days. If it does follow the script that I'm showing you here, then all the better. We have a precise wave count to work with, and that's the idea. That's 1, breaking down right here. That's 1. All of this is 2, and then you come down. You have this as a 3. This is a 4. This is a 5, and then you have this is an A. You have ABC, X, ABC. That's a B, and then you have a 1, 2, 1, 2, 3, 4. Expect a bounce above this level, and then going nowhere, and then a slight bounce to take us above that level to let's say go towards 1100, so even slightly higher, 1105 even, okay, to almost pose a threat to the previous high, but I would not expect it to go above 1105. Okay, and then the moment of truth for this wave count will show up. If we do break substantially, yes, if we do break substantially towards mid-range, when I say substantially, I mean we are probably going to break down under this support. You see that comes at roughly 1088. Yeah, breaking down roughly where it closed today, on Friday. Breaking substantially back under this level will tell you get ready. Get ready. The next target is going to be 1070 and lower. Okay, now if that doesn't play out at all, that doesn't pan out, it just continues straight down, then obviously that's going to be bearish. Sorry, I can't see how this would be bullish. Yeah, if anything, it's going to enhance the bearish case, and then I'll have to come and sort that out to see what exactly the price action that is delivering, what pattern is most likely to accommodate the price action. Just in case you would like to have further information or to learn more about my website, I thought of introducing very briefly my website here. That is the front page, and if you scroll down, you will see there are quite a few examples of recent clips that I added. I also have a lot of charts here. If you're interested, there are a lot of charts that you can study, examples of past market action. There are also more charts here under resources at the chart galleries. You have chart galore number 1, number 2, plenty of charts. You've got useful links, recommended reading list, okay, terms of use, private policy. You can get in touch with me if you have any issue, any question whatsoever. Here there is a description of the services, okay, and in fact this you will see once you log in. It will let you see what you subscribe to, okay. So if you subscribe to the Wave Mastery daily service video, you'll get that. If you subscribe to the weekend service, you'll get that. But before subscribing, you might want to actually take a look at a trial. Okay, so you can actually have a trial of the daily video service, the full service. You click right here, and it takes you to the page of the trial. It's 7 calendar days. It only costs €2.99. Okay, €2.99. You can pay with PayPal. It gives you access to the archive. You can also get in touch with me if you have specific questions. I will do my best to answer that. That is the daily service trial, and that's the daily service, the full scale. Then we have the Wave Mastery weekend video service trial. This is also priced at only $2.99. It gives you 12 calendar days. You get 2 long videos with that, okay, fresh videos, and you get access to the archive. And again, you can get in touch with me if you have any questions. That is the issue of the trial. Here on the main page you have some articles that you might want to have a look at, and that's the very brief introduction of my website. Hope you enjoyed the clip. Hope to see you on my website. Don't hesitate to get in touch with me. Wishing you successful trading. Bye now.